Good afternoon, everyone, and good morning to those joining us across Asia. We're delighted to have listeners joining us from across Australia, China, India, Korea, Malaysia, New Zealand, Papua New Guinea, the Philippines, and Singapore. On behalf of our partners at RGP and the Lease Accelerator team, thank you for joining today's webinar. Before we get started, I wanted to quickly go over a few housekeeping items. We'll be recording this webinar today, and a link to the replay will be sent via email in the next couple of days. In order to make this session more interactive, we'll be running some polling questions, and this information will provide us with a sense of who's listening today and allow us to tailor our presentations accordingly. I encourage you to participate in our polling questions when that slide is displayed. We also welcome your questions at any time during this session. To submit a written question, please type it directly into the Q&A window at any time. Your questions will not be viewable by other attendees and will be addressed at the end of the presentation. And lastly, if you're experiencing any technical issues, please let us know and our technicians are here to help you. In terms of an agenda, we have 3 segments to today's session. We'll open with an overview of where we are today and the business impacts and challenges that IFRS 16 has enforced on many organisations. We're delighted to be joined by our partners from RGP to talk to us about how to resource for a successful implementation and share some common pitfalls they're seeing dealing with compliance deadlines. And lastly, we'll look to the future and uncover how leveraging automation can deliver many benefits to the business beyond compliance and cost savings. Before we begin, I would like to briefly introduce our speakers. I'm delighted to be here today with Michael Keeler, the CEO and founder of Lease Accelerator. Since 2003, he has been the primary force behind the vision for what's now seen as the new software accounting category called Enterprise Lease Accounting. Michael has more than 20 years of experience building software businesses. Prior to Lease Accelerator, he served as the president of Onmark Corporation and founded 2 software companies. Welcome, Michael. We're also delighted to be joined by Sebastian Normand from RGP. Sebastian joined RGP in 2011 as Managing Director of the Singapore office and moved to Sydney 3 years ago to lead the Australian practice as VP of Revenue and Country Lead. He has over 20 years experience in finance, strategy and general management, working for PwC, Atos Consulting and a number of organisations across diverse industries, including healthcare, banking, pharmaceuticals, IT and logistics, and all across Europe and the APAC region. Welcome also, Sebastian. Last but certainly not least, we have Michelle Labut joining us. Michelle is Lease Accelerator's VP of Pre-Sales across the APAC region, where she is responsible for working closely with organisations to understand their challenges and demonstrating Lease Accelerator's suite of solutions. In her previous roles, Michelle has worked with a variety of sized organisations from the small to medium to very large corporates, including top ASX listed organisations such as PwC, Oracle and Microsoft. Welcome, Michelle. I think our listeners will agree that we have some very experienced senior experts here, and I therefore encourage you to ask questions through the Q&A panel during our speakers' presentations. And we will address the questions during the last segment of our session. So to kickstart today's session, we're going to open with a polling question. This will give some context to where the listeners are in their compliance journey and tailor our presentation accordingly. So without further ado, I encourage you to poll the questions. So the first question we have here is, when did you complete your first reporting period for IFRS 16? Was it in 2009, but before July 1st? Was it between July 1st and 31st of December, also in 2019? Are you still working on it, hoping to complete in 2020 between the 1st of January and June 30? Or will it also be in 2020 after June 30? So I welcome your submissions. So Michelle, whilst we're getting some respondents come through, can you provide some insights on what you're seeing here in APAC?
So basically at the moment, as most of us are aware, people have probably gone through the transition stage and got to compliance, and are at the compliance stage. So most people will probably in the on the poll will probably be around we're still working on it, or we're at on the 1 July to 31st of December is probably the most common places that we're seeing at the moment within the region.
Okay, we'll just give it a couple of more seconds, and I'm just going to push those results live. And as you said, Michelle, most are really looking for next year.
Genius. Wow.
Great. Thank you, everyone who participated in our polling question. Now, without further delay, I would like to hand it over to Michelle to talk to us about the business impacts and the challenges that IFRS 16 is enforcing on organisations across the APAC region.
Hi, Emma. Thank you very much. And to everyone around the globe who are on the phone, welcome to the call, to both joining us with RGP, who one of our business partners who works very closely with us. I'd like to give you a quick introduction as to who we are, who Lease Accelerator is for the people who do not know. We were founded back in 2003 as a lease management solution. And in 2009, we added the ability to do accounting. Back then under the old standard. And today we now cover all of the standards, whether it be ASC 840, 842, IFRS 16, and IAS 17. We've grown to a very large organization that is now globally represented. We have offices around the globe and thousands of users who use our system as well. We cover all your leasing requirements from real estate equipment, embedded leases, through to the real estate management, sourcing, and accounting, fully integrated as a total solution. We act as a full sub-ledger, and I think this is probably one of the key things to take away. So we can act autonomously. So we store all your data at an asset level within our enterprise lease accounting solution and integrate into any ERP or most ERP solutions. Some of our clients are using all of our functionality. We have customers as small as who have a portfolio of 10 leases up to customers who have thousands and thousands of leases. And no matter how big or how small your organization is, we help to automate this process. We also have all SOC 1 Type 2 compliance, SOC 2 Type 2, and then we have SOC 3 via our third party who we host with. So what we found in managing the full life cycle of our leasing cycle is most of you, or a lot of you, are probably busy in this stage where you're busy having a look at what you need to do to collect your data, to be able to get to a compliant stage. So what you've done is you're probably using Excel spreadsheets and you're saying, I need day one, I need to be compliant. So we'll just use Excel, or we'll use a solution to be able to get us compliant. We then, at this stage, most of you have probably done a round of reporting, and you're now in the stage where you need to do something a little bit more. So you're going to go through and we're going to have a look at what we're seeing in the marketplace. And one of the primary things is people are saying, yeah, it took a lot of data, a lot of effort, and Sebastian's going to cover that off later as we go through of what the challenges are that our customers are facing out there. But one of the things we're saying is day two is where we're at, and this is what people need to start looking towards. We then say, as you can see, most of the market at the moment is probably not there, but what they need to do is they need to be able to track the entire life cycle of your lease. So these are the events that can affect your accounting, and from an IFRS or from an IAS perspective, and from a ASC for those who have US reporting, you need to be able to find all of these, track these, the life cycle of the lease. So you can see these are some of the challenges that we have, and the modifications and reassessments that we go through. This can result in a substantial change to your numbers. If you don't have a solution that's going to help you automate it, it is a system that you would have to redo every single time you need to report. So whether you're doing day one or at the end of a reporting cycle, you need to go through and check all the modifications and reassessments to ensure that your accounting output as per the standard is then correct. So what we have noticed that in collecting all the data, it has become evident that businesses need to transform the way that they are currently working to be able to work with the standard. In some regions, you're going to be preparing for the changes, and RGP are again going to address some of these issues and help and talk you through those processes. So the pains that you're feeling at the moment are now when you've completed day one, you've got through to day two, and you've got a system that's going to help you automate the process. What we're going to show you is how to handle all these modifications, reassessments through a system that if you have everything planned and worked, it will then help you with all of your compliant reporting. Further to that, what you would have is you'd have a sourcing module to be able to help you out in the marketplace. So this will give you the ability to be able to put out things and being able to then be able to go out to market to have a look and see what is available for the leases that you require. The lessons that we've learned, and this is something that as Lease Accelerator has been doing for many, many years, and the last year with compliances and reporting, and we've been very fortunate in this region especially that the UK were ahead of us. So they uncovered a lot of the issues that IFRS was encountering. So from a region perspective, Australia has been Australia or Asia PAC has actually been very fortunate that these lessons can now be used, and hopefully we'll be able to learn from this. So what we've discovered is that the completeness of the data that people said, yes, we have everything, and yes, everything was up to date. When they actually started the process, they discovered that they didn't know where all their leases were, and they did not know what the lease values were. The calculations that they had in their lease data that they thought was correct was not necessarily correct. And when they started putting it through a solution and using Lease Accelerator, that the system was then giving them the calculations, and they were able to use it from an automated perspective. And one of the biggest pains that existed out there were the RDRs and the discount rates. So discount rate. So what people discovered is the biggest challenge is, and this is something that, again, Sebastian will be covering, was the discount rate is what discount rate do we use to be compliant for our reporting and for our auditors. So we store all of this information in Lease Accounting, and we help the process and help you to enable you to be compliant and work through the system. So with that, I am going to hand back to Emma. Thank you very much.
Thank you, Michelle, for sharing your insights on what you're seeing in the market. And there certainly seems to be a shift in recent months. Now, before we hear from Sebastian at RGP, and more so on the implementation side, we'd like to move to our next polling question. So again, I encourage you to submit your responses. This question is more related to implementation. So which of these areas is your biggest implementation concern? As Michelle mentioned, is it discount rates? How do you determine what the IBR rate is to use at the portfolio level? Is it data? Have you found all your leases, and do you know what data is required? Is it software? Will it be implemented and will it work on time? Is it people? Have we got enough bandwidth and the resources to implement this project whilst we do our day jobs? Is it budget? Are we having difficulty getting budget approved, or are we going over budget? Or lastly, is it audit? Will the auditors agree with our conclusions and our calculations? So we're seeing some results coming through there. Sebastian, from your experience, what would you expect to see here? I mean, it's probably across the board, but anything?
Yeah, I think data seems to be one of the key pain points. Mm-hmm. And probably people too.
Yeah.
Making sure, the organization dedicate enough people.
Okay, let's see. We'll just give another minute for some responses to come through. Thank you, everybody who has submitted. And we'll push live the results there. So interestingly, Michelle, you mentioned discount rates. That does seem to be a challenge for people as well. And data, as you said, actually data being number one, Sebastian. So without further ado, I will hand it over to Sebastian to cover off what you're seeing and what you experience from the implementation side.
Yeah, thanks, Emir, and thanks, Michelle, for the first part. Good morning, good afternoon, everyone. It's really a pleasure to partner with Lease Accelerator on this webinar. Before I start, I'd like to make a quick introduction on RGP. Basically, RGP is a US-based consulting firm with a human-first approach. We have more than 20 years of existence working with clients across various industries, providing operational support on middle back office functions, but also supporting and advising on transformation programs. We've worked on around 100 lease accounting projects with Lease Accelerator, mainly in the US, where we have developed a center of excellence, but also in APAC, being involved in several local implementation in Australia and New Zealand. Out of those 100, about 25% included what we call big circle activities, which are more focused on readiness. In this presentation, what I will cover is first an overview of the key challenges faced when implementing IFRS 16. Then I'll deep dive into the key decisions and data required for your implementation, as well as the common implementation pitfalls that we've seen and should be avoided. And I'll finish with the challenges around budgeting, planning, and staffing to achieve compliance. So on this first slide, you can see a number of key challenges that our client faced during their IFRS 16 project. We need to keep in mind that this implementation is a very, what we call, invasive transformation compared to other accounting standard changes that we've seen in the past, like, for example, revenue recognition. It involves many stakeholders, be it accounting department, HR, real estate, procurement, IT, legal, and you need to obviously coordinate and make sure that there's a strong alignment between those stakeholders to help in the design decisions, as well as making sure that you have a comprehensive list of use cases when you test the tools that you implement. As was already shared, data quality is a big challenge, and that requires altogether a very strong sponsorship. And we believe, of course, that project and change management are critical to the success of such projects. Now, so what are the key decisions and data required to start your implementation? I think our clients had to choose implementation decisions carefully from two perspectives. One is about the policies, and the other one is more regarding the software implementation. And I'll focus more on the policies for now. I think, for example, if you look at the practical experience, the watch out we have for you is some are very attractive for most organizations, but from an administrative perspective, there's an impact on organization. So, for example, if you decide to exclude your 12-month short-term lease, there's still a requirement to disclose the lease extent, and it can be challenging if not tracked properly in the lease accounting system. In terms of materiality, you definitely have some options, but ultimately, when you define the threshold, you still have to track what's excluded so that you can enable auditors to confirm the sum of what is supposed to be not material. So there's a number of things that our clients had to take care of. Another big one, as I mentioned, is more around data. Data gathering proved to take more time than our client thought. What we realize is that there are basically 4 steps that need to be followed. The first one is on identifying sources. There are plenty of different sources issues, whether it's from a geography perspective, whether it's the nature of the document, paper, electronic, and we need to have a comprehensive view of all the sources that have to be considered. A second step is more about making sure that the data are aligned with the requirements of IFRS. So again, all the policies and materiality decisions that are being made, you need to make sure that you have a plan of attack for gathering the data to respect those requirements. The third step, which is often minimized by clients and clearly needs dedicated resources, is about data abstraction. it could appear very simple once you've done the second step, to think you're going to very easily be able to access all this data. What you realize is that a lot of time what you have in your existing system is not sufficient, and you need to deep dive into the lease arrangements so that you have a comprehensive set of data. And the fourth one that is sometimes forgotten but required by our auditors, it's about making sure that you have a process in place and you can explain that process when your auditors come to review it. So here you get a list of those challenges around data gathering. I think I've mentioned already some of them, but again, completeness, location, accuracy of data and systems, materiality are lots of things that altogether can really slow down your process. So what are the common implementation pitfalls to avoid? We think number one is to have a plan and to stick to it. A lot of time clients don't have a dedicated project manager, and the challenge is that, as I've mentioned earlier, there are lots of different stakeholders, lots of different work streams to cover. So there's one of the critical elements that we see in the first phase around assessment is about ensuring that you have a strong stakeholder alignment. On the data, as I said, identifying and scoping lease agreements is also very critical. So you need to very early identify the deliverables, the timeline, and proceed in a well-defined order, though occasionally you may need to reassess your approach. On the design phase, obviously, making sure that you draft business requirements for software selection, and I'll deep dive a little bit further later on, is very important, and start gathering, all your data. On the implementation phase, obviously the import of the data into the application can be challenging, but also the integration test and UAT. And that's where, once again, you need to have a strong alignment between the different stakeholders, making sure that you cover all the cases that can happen. Updating procedures and control is also paramount for ongoing reviews. So altogether, to cover those three phases, that's where you definitely need project management, change management, and a cross-functional coordination. So another common pitfall is around software selection. We saw several clients jump into selecting software, organizing demos, before clarifying exactly what were their requirements, and then realize afterwards that their choice on pre-selection would not enable them to meet those requirements. I think the rule here is the more you understand your portfolio, the more likely you'll find the software that's right for you, both from an accounting perspective, but also from a broader perspective that can include reporting tax requirements or procurement requirements. So you need to, once again, you need to make sure that you have a strong participation of all stakeholders and define clearly all your use cases. Last point is that you will encounter errors. A common one is the misclassification of operating lease that should be capital lease. This will happen. This will require discussion with auditors, and it can manage, but it takes time. So don't minimize those challenges. The last thing I'll cover is about budgeting and planning as it relates to staffing and achieving compliance. So the broad statement is that your project may cost more and take longer than you expect. You need to allow time for negotiation around contract. Some of you are still in the process of implementing those standards and probably thinking about the software that they will choose. Auditor, I just mentioned, you may need to review some of the rules you want to apply and validate them with them. Yes. Third, document offsite and in storage. So it's all about the time that it takes to gather all these documents, and also making sure that you have a complete view of your leases. So altogether, you need to make sure that you have a budget approval for the whole project, and for that you can work with experienced people who can advise on a reliable, realistic number. And once again, don't skip on project and change management. you need to have dedicated resources, and that's RGP's strong recommendation, as the change has impact on the whole organization, requiring lots of communication. I think in conclusion, once your implementation will be done, the next challenge is really to have a clear process in place to ensure continuity and make sure that you have accurate and up-to-date info managed by people who are aware of the process and a process that can be controlled.
Great. Thank you, Sebastian, for your insights there. We've had a lot of questions coming through, which we'll address later in the session, but I encourage you to keep sending those through. Now, without further ado, Michael, I'm going to hand it over to you to share your insights around what the future looks like for leasing automation. And listeners are also interested to hear about the case studies from the global organizations that you're going to share with us.
Thanks, Emer. Thanks, Sebastian. I totally agree with you, by the way. Data is such a massive problem. I'll touch on that a little bit as we go through. But what I want to first focus on, if you'll bear with me with my funny accent, is the post-adoption challenges and pain that companies are facing right now. What we're seeing in the market is that a lot of companies went very early and decided to either buy a software product that they're struggling with now, they're struggling to implement it, struggling to get it to work, or they've decided to use spreadsheets, or because of some of the failings of the products they selected, they're really doing kind of a hybrid approach between the software and the lease and the spreadsheets, right? But getting the calculations correct so they can avoid a restatement and really kind of make themselves audible, that's getting compliant, and many companies are still struggling with that. Part of it is the data challenge, but it's also really about the calculations. The standards are complex, and this is not easy, right? Now, people who have definitely achieved compliance, whether with spreadsheets or with a product that they purchased early, they're now trying to figure out, how do I take time, risk, and cost out of my monthly close process, right? Shortening that time to close. And they're also looking at, how do I reduce headcount, right? And so, what I'm going to talk about is automating the lease lifecycle, which will deliver many different kinds of benefits. We call them silver linings. So it's not just about compliance, it's also about efficiency and savings. So PwC recently did a survey in the last month, and they found that more than 70% of respondents believe their current solution does not provide full functionality to cope with their IFRS 16 lease accounting and reporting requirements, right? And they're really just talking about the accounting, generating the debits and credits, generating the required disclosures, right? And it begs the question, if you're using spreadsheets or you have another system, is your approach to compliance sustainable and affordable? Now, the way we think about lease accounting maturity is we really see it as a maturity model. And it really starts with Lease Accounting 1.0, which everybody's been focused on. How do I get compliant so that I can transition to this new standard where I now have all leases on balance sheet that are longer than 12 months, right? And everybody knows, as Sebastian was describing, that this is a pretty significant project, right? Because you don't really know where the leases are, and then once you find them, you really have to read them with the expertise of the standard in mind to be able to take that data and put it into a system or into a spreadsheet to generate the required accounting, right? But beyond compliance, the next stage we call Lease Accounting 2.0, and it's really about scaling and sustaining your process. It's really about driving cost out of that process, right? Which means replacing manual work effort across the company, across the lease lifecycle with automation. And then finally, it's about optimizing that process and driving savings, right? So this doesn't have to be like the revenue recognition standard, just a big cost sink. You can actually get an ROI out of your lease accounting project. And controllers are increasingly looking to, how do I continue to get a return on that initial investment that we made? So what we're going to talk about now is how do we go from Lease Accounting 1.0 to Lease Accounting 2.0, right? So getting beyond that simple transition compliance objective, right? Now, everybody, when they think about leasing, they just really want that life cycle to be simple, fast, easy, and trustworthy. And they want simple, fast, easy, and trustworthy to apply to their lease accounting calculations, to the close process, right? They want the actual books to be locked so they can go from month to month and trust that the updates that they're going to make are going to be reflected within the appropriate cutoff period. They want their financial reporting and disclosures to be easy to generate, trustworthy, process automation and controls, right? The control environment for corporate controllers, it's not just about the disclosures, but it extends to the whole front end of the process, whoever's inputting data, right? And then they want to be able to have straight through processing from the very front of the process where you're inputting data, all the calculations and people explaining some of the changes that were made that Michelle talked about, all the way to the financial disclosures, right? And you want that integration to be able to leverage the subledger that Michelle talked about to take all that complexity and keep it in the subledger, right? You want the software to do a lot of the work, because the challenge is that if the software doesn't do the work, then you have to hire people to do that work, right? So there's a real kind of decision between how much do I use people versus how much do I use software, recognizing that you want to always be thinking about how do I make my close process more predictable? How do I take time, risk, and cost out of the close process? And that really gets to business value, right? Which is Lease Accounting 2.0 and 3.0. Where we always like to start is where accountants need to start, which is how do I defend management's assertions about our financial reporting, right? Well, that always is really, it's really about the auditor checklist. How are you going to be audited? And everybody talks, as Sebastian discussed, about the data. Completeness is a big problem. And you're going to think you have your data set, and you're going to continue to find other leases until you get control of the process on the front end, right? From an accuracy standpoint, you need to make sure that the data that you've captured is done accurately, but you also need to make sure that the calculations are done accurately, right? So quality of the calculations are really important, right? You know, existence, occurrence, rights obligations, and people don't think about it, but cutoff is also really important. It's really getting all the change information about what happened in your portfolio, you know, in your country and around the world. If you have multiple locations, and you have to consult with the people in those locations about the real estate assets, about the equipment assets, and what's changed. You have to capture that within the cutoff period. So this is the working backwards in the auditor checklist and figuring out how do I automate this so it's easy for my auditor to realize that that we've got it together and they can trust our books. So what we're seeing in the market is people coming back to the market to replace their existing software. Either the software didn't work, it didn't generate the calculations accurately, or the calculator worked, but that's all it did, and they have a much more elaborate process that they want to make simple through automation. And they really want to take costs out. They want to get to a lower cost of ownership, right? So they're now investing in real enterprise software that can help them automate all of the steps they have to do to comply with the standard, right? None of the steps are avoidable. The question is, do you want to do them manually or do you want to do them using automation? So I'll talk at the end of the presentation about Tyson Foods. Tyson Foods was using SAP Nikisa. They were frustrated with it and they came back to the market and they selected us and we replaced Nikisa around the world for them, and they were able to achieve a much lower cost of ownership through that automation. And I'll touch on Tyson's when we get to the end of the presentation. So let's dive in a little bit here and talk about how do you go from just that initial compliance project to Lease Accounting 2.0 and then capture the savings of Lease Accounting 3.0, which is the real promise here. So many companies, even when they first put their data into a system, right, they realize that they still have to manage their portfolio, and they have to do it with a strategy in mind, right? A big part of that is getting the dates right. The commencement dates are really important for the accounting, but the end of term dates are also really important for the economics. There's often billing errors that in landlord system, which sometimes result in overpayments, and CAM charges are often inappropriately high. And so being able to do that routine lease audit with the help of your software is really going to help you, not just with the accounting, but also with the economics. And you can really improve your real estate lease spend and drive savings by being able to use the information in your system using property management software capabilities, right? You can do it at the portfolio level, which is really about strategy. You can do it very tactically at the property level, right? The most important high impact one here, of course, is critical dates, right? But you can find savings that in many ways can pay for the whole real estate investment in a very short period of time. Typically 2 to 3% savings is achieved through improved lease administration. On the equipment leasing side, companies are trying to get a hold of the process, right? What we saw before the lease accounting standards emerged is you had real estate lease accounting, you had real estate lease management, property management kind of did its own thing. You had people around the world that were entering into equipment leases on a very decentralized basis. And the corporate controller then had the responsibility for, again, justifying management's assertions about their financials. And that extended the governance environment to real estate lease management and equipment lease management, which means they had for the first time to define a global process for leasing. On the equipment side, lease versus buy is really important, and it gives you visibility, especially if it's automated and part of the overall platform, into who's thinking about a lease, right? Many companies struggle with lease versus buy because it's a spreadsheet and it gets old, and you have to make sure you keep the values up to date to get the economics right. A lot of companies don't compete their leases on the front end and they overpay, and they don't have the ability to track when assets move or interim rent, all of which impact both the accounting and the economics. And on the back end, they often overpay for leases. Now, overpaying for leases is okay because you still get the use of the asset, but you never want to pay more than the original cost. And what we see is when people put their leases into a system for the first time, the evergreen fees, which is kind of a standard report in our system, it automatically jumps out that they can pay 110, 120% of original cost for that equipment, right? And so this is a great opportunity because all the data now is in the same place, and you can now have what's called in procurement world a spend cube. You know who you're leasing with, how much you're leasing, what you're leasing for, that you can consolidate your leasing so that you actually have fewer lease contracts, and you can compete those leases in the process with a bigger dollar number, which means you can drive down the overall spend, right? And these kind of classic techniques that procurement's been using for many years on the cash purchase side now applied to equipment leasing. So the competitive sourcing, if you do a lease versus buy and it says a lease, you want to be able to take that, automatically put it out to a community of leasing companies who want to compete for your business, right? And through that, you drive down the cost of capital through competitive bidding. And you should be able to do that whole life cycle online. Now, what's interesting is that even though this is really the front end of the process and very focused on savings, the people that are pursuing this right now around the world, right, is a Lease Accounting 2.0 and 3.0 step, are corporate controllers. Why? Because they want to get control of the front end of the process. They want to standardize and simplify their whole leasing process, as well as their contracts. They want to standardize their contracts. They want to have their own contract that they send out with a bid. So they don't just want the savings, but they want their accounting to become much easier. And they want to be able from the very beginning to track the leases at the asset level all the way through that life cycle. Another way that companies are saving money, and this is very similar to the real estate side, is managing key critical dates carefully. On the equipment side, you can, if you manage the end of term effectively, you can significantly reduce your end of term fees and overpayments, right? So squeezing the portfolio on the front end, using real estate brokerage, and then using brokerage on the equipment side as well by going to an automated marketplace. And then on the back end, making sure that you return equipment on time, making sure that you also notify your landlord on the real estate side. These techniques are all only now possible because you have all your data in one place. You might be managing that data on a decentralized basis, either around your country or around the world. But the fact that you now have a centralized system that facilitates that decentralized management means that you can not only get timely information to the controllership for your financial reporting disclosures within the cutoff, but you can also drive savings. And so if you really think about lease accounting compliance, right, Lease Accounting 1.0, it's really about addressing the risk of compliance. And that's really about, for public companies especially, making sure that you take the risk of any kind of market cap impact if you had to restate. But beyond that, Lease Accounting 2.0 and 3.0, it's really about improving your process, scaling and sustaining, and it's about driving savings. With better lease administration, because now you have all your lease data in one place, you can execute better both strategically and tactically and drive 2 to 3% savings out of your real estate portfolio. On the equipment lease management side, improving the end of term 10 to 12% savings for the first 4 or 5 years. And then on the front end of the process, using competitive sourcing of your equipment leases, you can generate 6 to 8% savings. Okay, this savings, not just doing the accounting, but doing better management, can more than pay for both the software and the consulting, right? And drive a net ROI benefit to companies within the first year. And this business case is very straightforward and easy to make. We look forward to talking to you about it. Just going to wrap it up here and just say that we're really grateful. This concludes our overall presentation. I'm going to speak briefly here about 2 case studies, but I just wanted to give you one more point about Lease Accelerator. We have about 550,000 leases in our SaaS platform. Everyone around the world uses one version of our SaaS software. We deliver that from 3 different regions: Germany, Australia, and US. But it's one version of the software. So we're able to support thousands of users, 550,000 leases, generating 7 billion journal entries in 172 countries, right? So chances are our portfolio of leases already represents the kind of lease portfolio you have, whether you have 10 leases or 100 leases or 1,000 leases. And we can extend the same capability to you incrementally. You can just get compliance. You can extend it to the full capability. And now I'll just talk about 2. Okay.
Sorry, Michael. Just thank you for all your insights there. Just before we jump into your case studies, let's get a sense of what are some of the benefits our listeners are hoping to achieve. So beyond compliance, do you believe that you will realize any benefits from enhancing systems, processes, controls for your leasing? And you can check all that apply here. So is it budgeting, forecasting, and planning? Better lease versus buy analysis, new lease contract negotiation, better lease administration, or internal management reporting? So I guess, Michael, just while we're taking some responses there, how would you suspect to see this in the US, and how might it differ from our community here in the APAC region?
I think everybody globally kind of wants and needs the same thing in terms of the benefits that they're looking for. I think having all the leases in one place is going to allow people to, come with strategies for savings. I think everybody wants to do better lease administration. I think that's going to be top. Internal reporting going to be top as well. I think budgeting forecasts would probably be third on the list.
Okay, thank you.
Wild guess.
Wild guess. All right. Well, we're just getting a few last submissions. Thank you for all your submissions. So I'll push that out. So lease administration is up there as predicted, and then followed by
budgeting forecasting.
Better
Surprise
forecasting.
win from behind. Oh, it came in second.
Great.
Okay, great. So now, without further ado, I'll hand it over to you to talk to us about a couple of case studies.
Yeah, the first one I want to talk about real quickly here is Cummins. Cummins is a global manufacturer of engines and power equipment, and they had, when we first started helping them, they had leases all over the world, and they had a difficult time controlling their process. They centralized their lease management at headquarters, and they realized they had about 7,000 leases around the world. And when we looked at we did the evergreen analysis and we triaged it, and we helped them compete their leases around the world. In about a year and a half, 2 years, we consolidated their 7,000 leases to about 3,500 leases, which was their run rate. A lot of that was just returning leases on time and refreshing leases, as well as aggregating them so we could drive more savings. So we reduced the number of unplanned and unwanted evergreen by 50%. We also reduced their lease contract by 50%. And that was really, and we did it in the process, we drove 8% savings on average through competitive bidding. So the savings paid for the whole project. And it was a wide variety of equipment. Of course, they have a lot of real estate as well that they used the system to manage. But this is a great case study because they were able to reduce the portfolio, which means they reduced the complexity of accounting by cutting their lease population in half as well.
That's great.
Let's now turn to Tyson Foods. I mentioned them earlier. They're while Cummins uses Oracle and integrates Lease Accelerator with Oracle, Tyson's integrates Lease Accelerator with SAP. And they originally tried to work with an SAP product called Makisa. But they were really focused on their process. This is one of the largest global producers of protein around the world. They dominate the market in the U.S. for chicken, pork, beef, and and they have many different kinds of leases that they use. Warehousing, they use a lot of very, very different kinds of real estate as well as equipment. And they were not only able to reduce costs, but really do the internal management reporting they needed to do at the asset level. And one thing I'll say that Tyson proved to us, we've been doing a lot of replacements around the world, a variety of other platforms, is that you can save money in that replacement cycle because you've already done so much of the work. If you've collected all your data already and you thought a lot about your processes and your controls, then it's very easy to implement a new system. You already have the data. You already have a lot of the data elements you already need. You've already thought about the process controls. It's simply about configuration, loading the data, and you're live. We took a major global corporate who was coming off another SAP system. We took them live in under 3 months because they had already collected all their data, right? So it gets back to what Sebastian was saying as well. Anyway, thanks so much. I guess we're going to transition to questions now, Emer.
Yes, we are. We've had a lot of questions come through. Thank you, everybody. Please continue to submit those. I might open up with a question for you, Sebastian. This has come through from Jason. So our organization has about 100 leases, so Jason's organization, and quite a small accounting team. So we don't have the resources to dedicate a full-time employee to this project. How could RGP help us?
Well, I would say that's sort of spot on for us. This type of support is really where we excel. We've helped many small and medium-sized companies, and I think what matters is that we bring the pragmatic and very hands-on expertise, so that the people can really be in charge and take that charge off your plate, basically. So I think that would be something we would love to do.
Okay, great.
Let me just throw in there that we've worked with RGP for many years, and they have very senior experienced finance and accounting staff who've seen a lot of different kinds of projects in the controllership, treasury, that they're able to deploy very quickly at very affordable rates, which is why they've done more than 100 Lease Accelerator lease accounting implementations around the world.
Mm-hmm. Great.
Thank you.
Thank you both. One probably for you, Michelle. This one's come through from Shirley. So our leases are multi-currency as we deal with a number of countries throughout Asia. Does your system cater for this?
So hi, yes, thanks, Shirley. Thanks for a good question. One of the things in the case study that was just covered off on Cummins is they're multinational, they're a global organization. And locally in the region here, we have a large number of other customers that have a large portfolio of multi-currencies. So we deal with it at the portfolio level, and you can have the currencies set up and you can report on them as well. So very good question. And yep, we have the capability. Thank you.
Okay, great. Michael, I think this is probably a good one for you from Glenn. Glenn, they only have property leases. Do you just do the accounting, or can you help with the property management as well? Do we have to have two different systems for our portfolio?
Lease Accelerator has a, hi Glenn, Lease Accelerator has a property management application that's integrated with our overall leasing lifecycle management solution, right? So it's really a platform that's used by the kind of VP of real estate and their teams to manage their portfolio. And what's nice is they can manage their portfolio like they would, to run their business for economic purposes, right? Transaction management, project management, managing the actual real estate facilities, and then just using that application, all those changes flow through to the accounting, right? So they just have to kind of follow kind of a month-end close schedule, participate that with the controller. But yes, we do support real estate as well. And we have many customers who have only real estate leases in our application.
Great. Thank you, Michael. This one probably, is for you, Sebastian, and it's from Rita. I have never heard of RGP before, and I was under the impression that only the Big Four were equipped to support clients on IFRS 16. What is your key differentiator?
Rita, thanks for this question. I'd love that you had the answer already, but unfortunately it happens. Especially in this region, in APAC, we have 12 offices, so I get this question quite often. That's probably less the case in the US, where we have 50 offices. But generally speaking, I would say our key differentiator is really about the fact that we only have experienced, practical, hands-on consultants who have been in our clients' shoes and really know what's important, what to focus on. Also, in this specific case, I think the fact that we've done more than 100 implementation with Lease Accelerator, the fact that we have a center of excellence in the US that we can leverage, so very strong expertise, I should say, is definitely something that will benefit all our clients in the region.
Great, thanks, Sebastian. Another one for you, Michael. So this is coming in from Edmund in Malaysia. Would you recommend the lease accounting software be managed centrally or decentralized?
Well, the thing is that you want the software to be able to support whatever the model is that's appropriate for your company and your culture, right? The leases you can't take out of the field, right? You can't take the offices out of the field or the equipment out of the field. And so you have to, every month, be able to find out what changed with those leases, what new leases were added, what leases were terminated. In some cases, especially for equipment leases, you could have a partial return, a partial renewal, a partial buyout, right? So you have to be able to, even if you centralize the process, stay engaged in a decentralized manner. What's nice about our platform is that we have the automated communications and the workflow at the asset level. So you can have the system go and say, hey, what changed? You're responsible for these 30 leases and these 200 assets. What changed? Or before the end of a real estate lease, you can say, hey, this real estate lease for this office is coming due in the next 18 months. What are you guys thinking about doing? Here's your options, right? And you can have them respond automatically through the application by email. It's very simple. And the system does a lot of that follow-up work, right? So you don't have to have a lot of people doing it. So You can run a decentralized process. You can run a centralized process. The system will really support what's appropriate for your company and culture.
Great. Thanks, Michael. Another one for you, Michelle. So this is Andrew, and Andrew says, we've already passed our first reporting period using an advanced spreadsheet application, but now we're on our second round of reporting. We're having to effectively do the whole process again to ensure our leases are up to date. How easy would it be to switch to your system at this stage?
Hi, Andrew. Thanks for the question. As you've heard, we've been talking about 2.0, so that is something that's probably relevant because what we're finding, as I've said already, a lot of our customers got to 1.0 and you guys are there with your spreadsheets. But to transition through and to be able to now take that information and put it into our system, we have what we call templates, and we can help you with the help of our RGP and other partners. What we do is we can actually take you through the process, and because you've done all the hard work of collecting that data, which, as you can see by the poll, is one of the key criteria of why people are taking longer to actually do the process. So you've already completed that process. So the process to get it into a spreadsheet and into our system is relatively easy after you've set up your policies and processes.
Great.
I just want to add to that if they're looking to transition from a spreadsheet and do an implementation project, they can not only just buy our software and hire RGP to implement it, but they can also ask RGP about their managed services offering, which is really appropriate for companies that maybe only have a couple hundred leases or even 50 leases. They don't want to actually staff a team to actually do the project and they continue to manage it over the life cycle. They can also leverage that, which is also built on Lease Accelerator.
Oh, that's great. Now, we are almost on the hour, so if we haven't had a chance to respond to your questions, we will get back to you directly on those. So for those who are looking for additional resources to help with your project, you might be interested in checking out our regional resources page. We'll also be sending out a link to the case studies that Michael spoke about and a recording to this webinar in the next couple of days. So I'd like to thank our guest speakers for sharing their insights today, Michelle and Michael, and especially Sebastian from joining us from our global partners, RGP. So I want to thank everyone that participated today and for taking the time out of your busy schedules to attend from across the region. This concludes today's webinar. Have a great day.